Hello, friends. My name is Thomas Abraham, and I'm speaking from New York on a nice, bright, sunny day. Well, we've had a lot of fickle weather here in New York over the past couple of weeks, but the topic we're going to be talking about is not so fickle. It's something which is really ramping up and accelerating, and that is tokenization of assets. Now, there's a lot of buzz around it. And I've read that the market opportunity or the market size was about $1.75 trillion in 2025, which is now expected to grow to about $25 trillion by 2033, which is really exciting. And to really demystify what tokenization is, I have with me today Travis John, who's the head of institutional DeFi at XDC. Travis also wears several hats. I recollect attending the RWA day that he hosts at various conferences around the world. So Travis, good to have you today.
Good to have you too, sir.
Nice to see you. Great.
Thank you.
Maybe you could start by, maybe introducing yourself, talking about the different hats that you actually wear.
Thanks for having me, Thomas. I appreciate it. So I'm Travis John, as you mentioned, and I started my career, I'd like to say, in Web 1.
Yeah.
I started in Y2K.com. And I started building software for financial institutions, really in the early days when we've seen several iterations, right, from Web 1 to Web 2, Web 3, and I've been building in each of these sequences. About 5 years ago, when I saw the Web 3 bug, right, I got the Web 3 bug with blockchain.
Yeah.
I really got involved in really how could I build the industry and bring it forward, because I've been part of Web 1, Web 2, and building systems.
Right.
I felt like the opportunity was to create a community, so I started a community called RWA Builders about 3 years ago, and it was an olive branch to the industry. So it was bringing institutional providers, infrastructure providers like Zeeve, investors, builders, bringing them together, helping us to what I called real world adoption. Real world assets, real world adoption, just to play on the RWA acronym. And so here we are today. I lead the institutional DeFi side for XDC, a layer 1 blockchain. I also wear a few other hats outside of the community I build as an investment advisor. So I'm really tapped into the full life cycle of tokenization. And I've run tokenization clinics. So really from a smaller issuer all the way up to institutional issuers, which we primarily focus on here in New York.
No, that's great, Travis. In the industry of tokenization, get it. But a lot of people who are outside it, and that includes C-suite executives at large enterprises and what have you, they don't fully get it. So the objective today is really to see how we could demystify tokenization. So how would you define tokenization in simple layman's terms?
Simple layman's terms, it's just taking something of value.
Yeah.
And in the case of institutional side or banks, it's deposits, it's their portfolios.
Yeah.
Finding ways to take that value and digitize it and add new layers of value to it, and even upgrading the efficiency and plumbing of those items.
Right.
So there's many ways to approach that definition, but I'd say in this case, that's probably the best way to simplify it.
Yeah. And then there are also so many asset classes. Now people say that pretty much everything can be tokenized, right? Now, so how would you really look at the different asset classes and what is easy to tokenize? And maybe we can just talk a little bit about that and then dive deeper after that.
Yeah, because I've been really early in this industry, I'd say that the idea of just tokenizing the world is a great tagline, but I wouldn't say that it's the best tagline, right? Yeah. So ultimately, there always needs to be a buy side. There needs to be demand. And ultimately, when you kind of look at this, there's two things. There's a regulatory framework from one side, and how your assets fit into that framework to tokenize them, which we can get into. And then there's obviously what the market wants. What is there a problem solution being solved? Is there a buy side demand? So what that means is when you run through that filter very simply, all assets don't need to be tokenized right now based on those simple filters. Like, is it easy and compliant? Can you do it? Is there a framework that you can fit into that makes this work? Is your legal department okay with it? And is there a problem solution buy side use case, right? So when you look at that, that's why you see things. The first RWA is digital dollars, right? So you use stable coins. That was the most obvious because it was easy to take a dollar and digitize it, right? So that's where I look at this from really strong use cases. I would say that one of the best ones, as we saw as this moved up the chain, was money market funds and T-bills, right? So taking other very standardized items, standardized assets and securities, and looking at ways that they can be standardized through a tokenization process. Because tokenization is, in a lot of cases, looking at like a table, like essentially a checkbox of what parts of that asset exist, and how do you digitize that asset so that it matches the legal framework and so that asset doesn't change. You don't want that to change. So ultimately, that's one of the biggest things I look at. And of course, when you look up the ladder of tokenization, the furthest thing out in a lot of cases is real estate, because there's so many, especially in the United States, there's so many regulatory and municipality and local frameworks as it relates to the title and the deed and how things are transferred, that it becomes hard. On the flip side, mortgages, loans, like for banks, taking their loan portfolios and tokenizing them, those are pretty clear frameworks because they're individual loans that can be tokenized.
Yeah, so I think tokenization in the financial services really, I think, a significant driver. So if you look at, let's say, deposits, now it seems that there are about $100 trillion worth of deposits around the world. And is that a low-hanging fruit? Is that something that a lot of banks, not the big banks, but the mid-size and the smaller banks could also do, because everybody has deposits?
Yep.
And what's really the flow? I mean, who are the players in the ecosystem? How do they all benefit?
Great question. I mean, I think from a banking perspective, by far the lowest hanging fruit is that's the engine of banks, is deposits, right?
Yeah.
There's nothing else really. Everything flows from that, right?
Yeah.
Going back to the flow. So tokenized deposits are probably the lowest hanging fruit as it relates to, outside of just adopting a digital dollar format, stablecoin. You have banks like JP Morgan has their own stablecoin called JPM.
Yeah.
Many of the banks, I believe, will have their own stablecoin. So they're going to have their own stablecoin that would represent a tokenized deposit, which also represents a dollar, a US dollar in this case. The parties involved is the bank. Of course, they're also a custodian, right? When we're thinking about it this way. And we have their retail customers, assuming they're both a retail and business banking construct. That's really the tri-party. Of course, there's multiple entities and legal and frameworks that happen there. But like in simplification of who benefits here and where the flow is banks are able to bring that digital dollar format. First, they have to have that foundational layer, create their own stablecoin or use an existing stablecoin like USDC that's regulated through the Genius Act, and build on top of that. And ultimately, what that's doing is the value for the bank is now they're opening up 24/7 money movement. That benefit flows to them and away from them, meaning it also brings value to the consumer, to the retail customer. They're able to essentially, like $100 example, a retail customer deposits $100. That $100 can be available immediately in digital tokens, where they're able to settle 24/7, buy, sell, and all of that's within the banking ecosystem. So instead of using like a credit card, this can actually be a lot cheaper. Well, transaction fees. The bank, and really as we have a lot of these consolidation efforts within banks, I see tokenized deposits being even more of a reason of it's a stickiness factor for banks, particularly community banks and even smaller regional banks. Is how do you build that subscription model, if you will, of deposits that are coming in, and how do you provide that value to your customer? From the retail side, they're seeing benefits of 24/7 access, quick payments and settlements.
Right.
They're also able to leverage that even cross-border a lot of times, because if this digital dollar can become an FX exchange much easier than being just domestically rooted. It opens up significantly more opportunities for businesses, because businesses, this could be collateralized for loans. Again, this can be cross-border. They can make payments to their vendors. There's a number of applications that can be installed there. Plus, as we've seen with credit cards, a good example is Amex, with the way that they do all of their rewards programs, right? With your own tokenized deposits, you can have even more outside of just basic interest that you provide. There's all kinds of other reward programs you can build into that. So your customer value can increase significantly if you do this right. Not just for you as the banking client, but also for your end clients, whether they be business or consumers.
Right.
Yeah.
Okay, now you did mention quite a few benefits. Now, it seems that are banks working in isolation, or are they connected? I mean, I think interoperability seems to be one major issue that people talk about when it comes to tokenization. So, how is that getting fixed? How can that be fixed?
Well, I mean, we've seen a little bit of this. I would say I don't see banks working very closely together yet.
Yeah.
And I don't know that that is going to change. I still, this, in general, we definitely are in a very capital-driven, capitalist type market. So I would say in general, seeing banks work together is not likely, but the representation of your dollar is a dollar, my dollar is a dollar.
Yeah.
There's a foundational system there, and I see that being the same use case. The JPM digital dollar will be accepted at other banks, and vice versa. I see a future where that does exist. So I think in that case, yes, I do feel like there's a significant consolidation that's in our future as it relates to banking in general, which is why I'm a big fan of helping any bank to see what options are on the table, how they can continue to grow and to have a stable growth curve.
Correct. And the other thing potentially could be regulations, because there are regulations which define tokenization in different geographies. So do you see that as a hurdle at this point in time, and what are banks and other entities actually doing to manage it in this regulated environment globally?
Well, I think the biggest thing right now, of course, the elephant in the room is the Clarity Act. I mean, we're up against a deadline here at the end of April, basically, for this to get done, or else it could get pushed out until next year potentially because of midterms. The Clarity Act is a big deal because this has a lot to do with, again, going back to kind of the rewards on deposits, right? Once the Clarity Act is passed, and again, depending on where that falls, there's obviously just the short background, of course, is that companies like Coinbase and crypto companies have been paying yield on some of these or giving rewards on these stable coins. And the Clarity Act is going to provide more clarity as to what banks can do, what crypto companies can do. So there's a level playing field, right? Once that's completely settled, in my opinion, I mean, banks are already doing this in the boardrooms. We're already talking to banks. I know you are as well. They're already talking about what they're going to do and what some of their plans are. But until the Clarity Act passes, that really is going to be where I believe a year ago almost, when the Genius Act passed, that was a green light for commerce to open up in the US, just in general. The Clarity Act is what's going to be the green light for banks to open up to this. Now, again, they've been planning in the boardrooms, but this is going to be the biggest part and the biggest regulatory hurdle that's going to change everything for banking, for tokenized deposits, for tokenizing loans, for opening up all of these markets.
What we're also seeing is that a lot of banks and other financial institutions are looking to set up a custom chain for tokenization, because their tokenization various asset classes. So there are several use cases around tokenization. So is there merit in our banks looking to set up a custom chain? I mean, they're saying that, look, we could tokenize assets and put them on a public chain, right? But some of them are looking to perhaps set up a subnet of their own, or a app chain, or a layer 2 roll up, or a layer 1 chain. So what is your sense on that? What's your reading of that?
I'm still a firm believer that there's multiple use cases, and banks are seeing quite a bit of benefit of, and we're seeing this also with growth of blockchains like Canton. But ultimately, banks want to have, because of regulation, based on our prior discussion here, and because of the regulation just in general of running a bank or a regulated entity, the subnets are having your own layer 2 blockchain is by far, I'd say, the most obvious alignment for banks, really, because they ultimately can can enter the foray into blockchain
Yeah.
without giving up or moving fully into a public permissionless environment. In my opinion, I believe we're in a permissioned or permission light environment. I believe that is the future in a lot of ways. I don't believe that just connecting your wallet and not having any KYC or any due diligence is going to be the future. So I feel layer 2 blockchains and a network of networks is going to be a big part of that.
Yeah. No, great. So thanks so much, Travis, for this chat. And I think our viewers got a fairly simple version of tokenization, and I think we were able to demystify it for a lot of people.
Yep.
So thanks so much for that. And for your viewers, well, hopefully you found this interesting, and we'll have more deeper dive discussions on tokenization in future episodes. Thank you so much. And signing off from New York.
Thank you.